I say we go ahead and get started for the day. We have Gary McDonald with Tried and True Home Loans going to give us a quick little mortgage update, see how we're doing. I know the rates have been improving over the past week or two, and it's not leaps and bounds, but things have been kind of heading in the right direction, which is, good for us. It's something we like to hear. Hopefully, it helps get some of these buyers off the fence a little bit. I know I've been seeing some somewhat, dismal reports as far as pending home sales and things like that. And so I think there's just, a little bit of fears in the economy and, how things are going to be shaken out over the next few months, but it's kind of early to tell and things seem to turn around pretty quick sometimes. So, a little bit of a slow start to the year, but things are still selling. I just put one in contract yesterday. And I've been seeing and hearing from a lot of you that there's some new listings and things like that coming on the market. So it seems like stuff's starting to kind of shake loose a little bit, just a little slower than usual. Gary, what are you seeing out there?
I'm seeing the exact same. In fact, I'm going to be covering that bit in a couple of minutes. But yeah, let me show. And sorry, folks, about the video quality. I don't know what's going on with that, but yeah, let's share the screen. Hopefully, this isn't as grainy as the video.
No,
So
screen share looks good.
yeah, the screenshot is great. It's just the video for some reason is not doing well. But anyway, my name is Gary McDonald. I'm with Tried and True Home Loans, the sister company of Rise Realty, and I haven't been on for a while. So just give you a quick reminder of how to find us. You go into the Rise Realty back office, and there we are, Tried and True Home Loans. Just click on the logo, and you can find all the loan offices in here. And like I've said in the past, that we would love the opportunity to earn your business. So if you do have any questions about loan products, or if you have a client who's looking to get pre-approved, please reach out to one of us, and we would love to help you. All right, so let's get into this. So yeah, here we are, March already. I mean, time is flying by.
Yeah.
So let me get onto the rates. So as Travis was saying, rates have dropped down. This is the 12 months graph of the 30-year conventional fixed rate loan. And a couple of weeks back, we were at 7 1/8, and already we've gone down 3/8 to 6 3/4 on the conventional. And on FHA, we're down 6 1/8, so just above 6. Same on the VA, we're down to around 6 1/8 again on the VA mortgages. And the reason these are coming down, there's a couple of reasons. One of them is the consumer confidence index has been dropping this February. People aren't as confident in the market and the economy in general. So this is one of the things going on. And the other thing is the US jobless claims. Um, we were at 220, and then all of a sudden in the past week or so, we've jumped up to 242. And these gray bars are kind of the future projections for this quarter. Again, even going up higher than this. So these kind of things spook the investors, so they're not as likely to invest in the stock market because they just don't know what the stock market is going to do. So they invest in more secure investments like mortgage-backed securities and the 10-year treasury bonds. And when investors aren't going into these bonds, um, they have to raise the rates in those bonds to entice the investors to go in and buy them. When the investors are going in like they are right now, they can lower those rates because they don't have to entice the investors. And so that's why the mortgage rates have come down in the past week or two. So just to pop back up to the conventional one, you're seeing here in front, there's a 6 in front of the dot as opposed to before being a 7 in front of the dot. And this is kind of a psychological boost for both buyers and sellers that things are looking better. So this is one of the psychological boosts. And the other thing is a lot of people, a lot of buyers and sellers have kind of put a number on on the plans. So, for example, they would say if rates hit 6%, we'll do something, we'll buy a place, or if rates hit six, we'll sell a place. And rates just aren't playing along. So a lot of people are just tired of waiting. And so you have these who are seeing the rates coming down, and you've seen people who are just tired of waiting. And so if you're looking at the numbers, like on the active listing inventory, this is for Orange County, but it's pretty much the same for all counties in Southern California. It's definitely higher than the past 3 years since the pandemic. Not as high as the pre-pandemic levels, but it's definitely on the up. And as you see, for most of the years, blue 23 was a little bit unusual, but in most years, we're going to see an increase over the summer up to September when schools go back and we're going into the holidays, things will start to slow down again. But this is the listing inventory, this is the demand. And again, not brilliant at the moment, we're doing all right. But if these rates, and there is a bit of lag with the rates, the rates have come down, and then we're going to see demand pick up. And if rates stay down or keep coming down even more, we should see a lot of demand picking up. So a lot more buyers and sellers on the market. So you can see from these two slides, there's a logo in the bottom right corner, reports on housing. This is a company, it's a guy, it's basically one guy now, and his son joined him, reportsonhousing.com, and they provide housing reports once every 2 weeks, and he covers various counties. He does the Bay Area. I'm not sure that's a county or not, but it's the Bay Area, Ventura, LA, Orange, San Diego, Riverside, San Bernardino counties. So let me go to the thing. This is his website. So if you are interested, check out his website. And I'm not a big proponent of spending money on things like this, but this is like $15 a month, and you get a report once every 2 weeks. And I think it's decent value for the money. So when he sends it out to you, this is how it's going to look. This is the last one. I think he'll be sending one tonight, but this is how it looks. There's a lot of good information in here. It's easily to read. There's graphics and all kinds of stuff in here that you can send out to your database, sphere of influence, and all that good stuff. So this isn't very pretty how it looks right now. This is basically just the information that he's sending out. But if you want to do it like in an email format, where this is basically the same as that Word document, but it's just a bit more readable in this format. So if you do need some help in getting your emails formatted like this so that you have it a little bit nicer, just reach out to me. I would be happy to help. But this is kind of how it looks, sending it out. So let's go back to this. And then if you have this information, or if you have some of your own that you'd like to send out, there's various means of getting it out to your database, your sphere of influence, and prospects that you're going after. You can go use the social media, the usual Facebook, Instagram, LinkedIn. Well, it's X now. You can put it into an email marketing campaign that you can send out once every 2 weeks, and include other things too. If you wanted to do that, you can do blog posts. If you have a website, it's going to help the SEO. And well, it's not just on your blog posts, but this kind of information makes you a market expert, whether you're doing social media, emails, whatever. But you can also put it in video content, YouTube, Instagram, TikToks, or whatever else you can find. Open houses is a great place to be doing it, especially right now with things picking up. It's a great place to find buyers and sellers. So I highly recommend doing the open houses. You can do direct mail, gets a little bit expensive. But if you're doing a farm, you could probably put them out as flyers and all that good stuff and lead magnets. So if you offer a downloadable report, they can give you your contact information and send it to them. So that's a pretty good thing. And I almost forgot to include this, and I just remembered about 20 minutes ago, and I put it in this Thursday, March 6th. For if you have clients who are looking to buy in Riverside or San Bernardino, there is a program at the down payment assistance program up to $40,000 available. And there's a workshop this Thursday, March 6th from 5:30 to 7 p.m. And what I'll do is I will put a link to that. Here we go. I'll put a link to that in the chat so that for those of you who want to attend, you can sign up and attend. It's a free one, but I think it's a good program to have a look at. And if you have any questions or want me to pre-approve some clients for you, you can please reach out to me. If you want to scan this QR code, you can put my contact information into your phone so that you have it directly. But that's pretty much it. That's pretty much all I have. Are there any questions? Are we seeing any questions? I haven't.
Looks like the link didn't post. You might have.
No, I haven't posted the link
Oh,
yet,
okay. So,
but I have now.
all right, good info. I have to say the past, I don't know, couple weeks, we've put two in contract myself, and both of them were with first-time home buyers. So I definitely think that some first-time home buyers right now are kind of looking at the opportunity of, a buyer's market in some areas where, the homes have been sitting on the market for several weeks now, and they're shooting their shot, So this is a good program where they can get some down payment money, or if you know anybody and you're in, looking in those areas that just says, I don't quite have the down payment, this could be, their opportunity to be able to get that. So I imagine it's going to be somewhat similar to the Dream for All program, which we've done a few of those, and it's just a great program to help people get into housing. So yeah, check that out.
I'm seeing a comment in the chat that they don't see the link.
You send it to host and panelists. You have to send it to the whole group.
Oh, sorry. But and amateur with all this, I guess. All right, everyone, try again.
Cool. All right. Well, thank you for that, Gary.
You're welcome.
Next
Do you
up,
see it now? Do you see it now?
looks like it went out to everybody. Yep.
Okay, yeah, cool. All right, thanks, guys.
Yep. So next up we have Alex. He's going to go over. So I get this question a lot actually on kind of setting up your real estate business. How can you defer tax liability? How can I save for the future? All of these things, because being self-employed, it's not like you just have a company sponsored IRA or anything like that. So I thought it'd be good to have him come on and kind of go over some options on what we can do as self-employed real estate agents to better our position later on in life and be able to exit, the real estate business at some point. So, good morning, Alex. How's it going?
Good, good. Thank you for having me. Can you guys hear me all right?
Yep, can hear and see. Yep.
Perfect. Yeah, so my name is Alex Raffi. I'm a financial advisor and licensed agent with Goldbook Financial down in the Costa Mesa office. I have my partner, CFP Simon Golden, on as well. We're going to be, like Travis said, we're going to be doing a presentation just to give you guys hopefully some general education on how to grow and benefit your individual businesses. It'll be more of a general conversation. If anyone has any specifics, I'm going to post my contact information. Feel free to reach out via email, text, or call. We can set up a meeting. Anybody that reaches out from this webinar will have a free consultation. So I'm going to share my screen now and let Simon take it from here.
Great.
Perfect. Alex, you want to bring up that presentation?
Um,
There we
looks
go.
like it's coming in. Yep. All right.
Go
We
ahead
can see
and
it.
present. Perfect. So yeah, as I said, I'm a certified financial planner. We work with Goldbook Financial. We are a Mass Mutual firm. We have offices down in San Diego, one in Costa Mesa, as well as an office in Scottsdale. And virtue of Zoom, work with individuals all over the nation. We're always looking to grow our professional network of not only realtors, loan officers, et cetera. Because obviously, when it comes to financial planning, a lot of our clients are looking to build in their first time home purchases to their plan. So always looking to expand our network there. But this presentation today is really designed to provide you some general financial insights about realtors and I know sometimes taxes and legal talk can be dry, but stick with me. Today isn't about complex legalese. It's about helping you keep more of what you earn and build the future that you want. So just remember we'll be sharing some powerful strategies. We have to say this because we are financial planners. We're not legal professionals or CPAs, so that's kind of this introduction and disclosure there. But yeah, Alex, if you want to move on to that following slide. So, financial planning really isn't just for the ultra wealthy. It's for anyone who wants to take control of their financial life. It's about confidence, strategy, and ensuring that your money supports your life, not the other way around. So, today we hope to kind of give you the tools and strategies to build your confidence in finances. Just like you guys do when you're helping people navigate a home purchase. So, Alex, you want to move to the next slide here? What is financial planning? It's your relationship process that's ongoing. It's not a one-time event. It's kind of like having a GPS for your money. So without it, you're kind of just driving around. Hopefully you'll end up where you want to be, but with a plan, you know exactly how to navigate the roadblocks, the slowdowns, and the opportunities that come along your way. It's really not about restrictions, rather about giving you choices. So, the choice to retire on your terms, to take time off without financial stress, and the choice to invest wisely, secure your future. We want to move to the next slide here, Alex. Alex, we go to that next slide.
Did we lose
So,
Alex?
Alex, is it not going across, or I don't know what's going on there? Well, the real estate industry is unpredictable, and financial planning creates long-term security. So without a plan today, tomorrow's big commission check can kind of disappear faster than you think. Really creating a structured approach to finances ensures having some of that consistent growth. We all know real estate's a hustle, right? You grind, you close deals, and then crickets. So how do we make our income work for us rather than the other way around? So it's not just about making money, but making sure that your money's working for you, whether you're closing deals or on vacation. Um, and Alex, are we having trouble? Do you want to maybe stop your share and go so that you can kind of see these slides as we go through some of the foundational points, especially as it comes to real estate agents?
Yeah, it looks like it's kind of froze up. He's on mute too. I don't know if if his internet went down, maybe.
Let's see here.
Yeah, he's coming back in.
Okay. Yeah, I don't know. I don't think I have the ability to share, but
Okay, it looks like we're starting back up.
perfect.
Okay.
Alex, if you want to skip over to, it'll just say core topics, 2 slides ahead, I believe.
I'm trying to get my computer to follow with me. Give me 1 second.
And while we're kind of waiting for these technical difficulties to pan out, please feel free to drop any questions as we go through some of these next slide. A lot of them are going to be kind of the core foundational topics and the goal-based topics. Looking at things like retirement planning, managing irregular income, taxes, investments. So I know these topics can kind of get into the weeds, and a lot of them are going to be based on people's individual situations. But if you do have any questions, feel free to just drop it in the chat, and I'll try to address them as we can.
So I'm just gonna grab it. It's gonna be not quite as pretty, but
Yeah, that's completely
okay.
fine. If you want to scroll
All
down to
right.
the next,
Okay. So we're here.
perfect. Sorry, one more. I'm gonna keep going down to, let me skip this slide as well.
Here.
Right here is perfect. Yeah.
Okay.
So again, we have our core topics are kind of the foundation. Just like you wouldn't sell a home without a solid foundation, you can't build financial success without these core elements. So this is really going to be things like, knowing your numbers, protecting your income, and preparing for the unexpected. Much like you guys, Alex and I, are building our own book of business. And it says they're not seeing any change on our side. Let's see if they.
Same first screen.
Interesting.
How about now? Can you see it now? Looks like it's showing on mine.
Yeah, it's showing on mine as well. See,
Yeah.
perfect.
Okay.
Thank
All
you.
right.
If you want to just scroll down that core topic slide,
Okay.
perfect. So I would say this includes emergency reserves, insurance coverage, and estate planning. And like I said, Alex and I are also going to look at this. We're contractors ourselves, so we understand. Some months are going to be, are going to go really well. Some months are going to be really slow, and so making sure you have those certain stop losses in place. God forbid anything happens to us. If we're out of work for some reason for a couple months, the market just isn't going the way we want it to. So really just preparing for the unexpected. That's really establishing, the foundation of our financial plan. So making sure that we're tracking our cash flow, right? Being cognizant of the dollars coming in versus going out. One of the strategies that we have for a lot of our, real estate agents is making sure that they're paying themselves, a salary. So we'll go into that a little bit more on some of the base topics. If you want to go to the next slide here, Travis. So, goal-based topics vary, right? It's different for everybody. Some people want to retire early. Some of you are looking to build, investment property, portfolios. You're looking to fund your kids' colleges, education. And so financial planning kind of helps you align the income that you have now, the investments you have now, the expenses you have now to meet those goals. So, is it buying your dream home, retiring early, whatever it is, having that financial planning roadmap helps get you there. The beauty of being your own boss is freedom, but freedom can disappear fast if you don't have a solid plan for how to manage your money. So if you want to go down to the next slide here, one more, thank you. So, when it comes to managing a regular income, one of the things we're often recommending is, paying yourself a consistent salary, even with fluctuating commissions, helping you guys set up, separate business and personal accounts to kind of avoid cash flow issues, and helping you build emergency funds for, slow months. I think we've all been there. One month you're, cashing commission checks like a rock star, and you're wondering if you should start driving Uber. So hopefully that doesn't sound familiar for you, but managing a regular income is kind of the secret sauce to financial stability as a realtor. So again, the key here is paying yourself a salary. So instead of spending every commission check, creating a system where you can pay yourself a steady income, just like a traditional job with all the perks of being your own boss. And that kind of jumps right into retirement planning. Realtors have no self-sponsored retirement plan or employer-sponsored retirement plan. Sorry, but you guys do have access to some really great options. Things like these SEP IRA, these solo 401k, and the Roth IRA. Real estate investments can be supplement retirement income, but diversification is key. A lot of people think, when they hear the word diversification, it's about their stock portfolio and making sure that you have different index funds or whatever it may be there. But really it's, how are we diversified across a lot of different asset classes, right? So, do we have real estate in our portfolio? Do we have, normal equity and stock investments? Do we have other tax advantage assets? Maybe alternative investments that really diversify us across the board and can provide us with multiple streams of income. So that's really trying to tie that into, real estate's retirement planning. A lot of you guys probably don't know this, but the solo 401k, though it can take a little bit more time to set up, and you do need to have, your own business entity, whether it's, an S corp or an LLC. Once you do have it set up, you are able to use the funds, the pre-tax funds you invest in your solo 401k to actually purchase property. It's the only retirement account out there where you can purchase real estate inside of a retirement account. Now that gets a little bit into the weeds and is nuanced. But if you guys are interested in learning more about that or how you can set one of those up, Alex, and I'm happy to have that consultative meeting for you. And what I'll say is it's not for everyone. The limit that you can defer yourself as a self-employed individual is actually $69,000 into a 401k for a year. So it's just going to depend on what you're earning, what you want to save, and when you want to retire. And just to keep this in mind, I'm sure many of you know, but any retirement account, whether it's a Roth IRA, a traditional IRA, or some of these other ones like the SEP IRA or Solo 401k, you can't access these dollars until you're 59 and a half without some tax restrictions. There are a couple caveats to that, but for the most part, it's all about figuring out what do we need during the wealth accumulation phase, our high earning years, and then what do we want our retirement to look like? What age is that going to be? Because that's going to help us figure out, where we should be investing our dollars. So, the good news for you guys, again, you don't necessarily have a boss. The bad news, you don't have a pension. So the real news is you have options, and some are even better than the traditional retirement plans, as I mentioned, like the Solo 401k. So, when you retire, whether you want it to be 50, 60, or, maybe even, 45, if you want to be really early, you need to make sure you have things like, rental income, stock dividends, and that you have these well-funded retirement accounts. So that's not just a dream. It's really just, smart financial. And if you want to move to the next slide here.
Yep. So one question. So for someone starting out, I get the question quite often where they're like, should I set up an LLC, or they want to set up an LLC like right away to, be paid into. Generally, I recommend against it because of the cost to maintain the LLC in California if they're really not doing some pretty steady business.
Right.
I do recommend that they get a business account usually just to keep things separate. Is that something you would recommend as well? Or let's say someone's just starting out and maybe they're only gonna, sell maybe 3 homes their first year. What would you recommend?
I think you
to
bring
start
up
right away.
a really great point. I mean, I think anything financial planning is going to be, based on the individual. And that being said, it's, really based around how much they're earning and maybe how far they are in their career. Maintaining an LLC in California is definitely not the cheapest thing. And it's going to make more sense when you have, a more established business. Maybe you've been, a realtor for 3 or 4 years at that point. You can kind of figure out, okay, I'm going to make X amount this year. Obviously, we're going to have goals to do better, but I can guess this much is going to come in. And that's when you really start, establishing those business entities. And I think, Travis, you're definitely right. When you first start, it makes sense to at least just have a business account. And we'll go into this a little bit more. There is a tax planning side, about how you can, track certain things, take certain deductions to really help you out in those first years to keep as much, money as you can in your pocket. I think, when you're first starting out as a contractor in any business, there's definitely, some tax planning you can do to keep most of those dollars in your pocket, or at least have most of it going to either your business or yourself. So that's definitely something to keep in mind.
Right.
I think, do we skip over the investment planning side? I think it's one
Yeah, I just wanted to the next one. So now it's protection planning.
Perfect. And so one thing that a lot of realtors and just contractors in general, don't really ever think about is disability insurance. When we're addressing individuals' financial plans, we often recommend getting it. It can be really, really inexpensive. Well, you guys don't have things like sick leave, PTO. So God forbid something happens to you where, you can't be out there, hustling, selling homes, making sure that you just have a steady income coming in to, keep the lights on at home. Again, this is something that we can review. Often you can set it up through your LLC, maybe take a deduction. So there's different ways to get that in place. Also, the importance of liability insurance for lawsuits. Basically this is just called umbrella insurance. It's very, very inexpensive as well. God forbid, you have a disgruntled client, or maybe you have a couple different rental properties and you have a disgruntled, resident who's living there and renting it out. This can keep you from having to use your personal assets to pay for legal fees in that case. And then also the role of life insurance. Again, these are things that are normally employer sponsored, but when you're setting up a business for yourself, you should be, thinking about them at the minimum. And so, depending on what you want for your business, if you have partners or, the legacy for your family, making sure you just have the right types and the right amounts of, life insurance. And so, many of you do a great job of protecting your clients during a deal, but just making sure you're protecting yourself, right? Without the right insurances, one lawsuit, one accident, or one health scare could, wipe out everything. And if you want to go on to the next slide here.
Yep.
This is going to be everyone's favorite topic, and I would love different questions to come in if you have them. But how do I lower my tax liability as a tenant contractor? So obviously there's a couple of shifty things we can do that are legal, like certain tax deductions, right? And making sure that we're writing off home offices, writing off marketing expenses, tracking our mileages, and things of those nature. I think you need to be tracking your expenses year round to avoid tax surprises. If you're not working with a CPA, please go get one. You will, it pays for itself in savings. Again, Alex and I have extensive network down here in Southern California, as well out in the Scottsdale area, and I have quite a few good connections up in Northern California. So if you guys need a good CPA, feel free to reach out to us. We're happy to recommend you over towards a couple. But at the end of the day, we all work too hard to give the IRS a tip. So the right strategies can help keep more of what you earn and reduce your tax bill significantly. The real estate agents have so many tax advantage, but most of them, aren't taking full advantage of them. So again, if you're tracking every business expense throughout the year, if you're not doing that, you're leaving money. There's also, of course, different financial products that I mentioned earlier, or accounts that you can use, like those retirement accounts, that are going to help you in the long term. When you go to pull money out of whether it's a solo 401k or traditional IRA, we're going to have to pay taxes on those dollars. So leveraging things like Roth IRAs or after-tax vehicles gives us a place to save where the money can grow over time. We're never going to pay taxes on it again. Also making sure that, if you do have an LLC or an S Corp, the way that entity is structured and paying you out is in a tax efficient manner. We're working with individuals on that all day. So something we mentioned earlier is, if you're getting big commission checks, do you have those retirement accounts set up? Number one, because we can defer a lot of that in there and not have to pay tax on that today. Or number two, are you paying that out to your individual account? Or are you paying it out to your business account? And how are we streamlining that over time? So if we pay it out, if we 1099 ourselves over time, there's a couple different deductions we can take. And again, this is going into the weeds a little bit. We're happy to sit with you and see if that makes sense for your personal situation. Another thing here on income tax planning is, if you yourself have your real estate business, but also rental properties, it's often going to make sense from a tax perspective to have more than one entity. So that means more than one LLC or S Corp. So that way, again, there's multiple deductions we can take inside of both of those LLCs that are going to save us from a tax perspective. So you don't necessarily want what you're using for your commissions to be also getting your rental income. We can go farther with the strategy if you guys would like to learn more about it. If you want to go to the next slide here, Travis.
Yeah, and that's where the business account comes in handy, is because it's easy to track, right? So if all your money is going in and out of that business account, even if you're not quite ready for the LLC, it's easy to track that throughout the year and hand that over to your CPA or whatever. So that's the main reason why I recommend the business account for getting set up and started. Okay, we're on the next one, education planning. Oops.
So if you're, a realtor who is planning on starting a family, who has a family, and you want to pay for your children's education down the road, the main one you're probably hearing of is the 529 plan. So it isn't just for college. You can also use it for private school, tutoring, and even some study abroad programs. But it's a tax advantaged way to invest in your child's future. I will say, much like many of you guys, if you think your kid's going to be an entrepreneur, if they're going to be running their own business, the college isn't necessarily the path for them, then the 529 is probably a little bit of a gamble because it is for more of those qualified education expenses. And just like our retirement accounts, if we pull it out for something else, we can't take it tax. Another thing that's new in tax legislation as of last year, which is kind of nice for your kids, if they don't end up using it for college education, you can convert a certain amount every single year into a Roth IRA for them, so you can save for their education. If they don't use it, then you can help set them up for retirement. So it is a little bit flexible, but if you think your kid's going to be an entrepreneur, it's probably better off to just invest in a normal investment account for them. That being, they can use those dollars whenever they need it without tying it up for just education expenses. something to keep in mind as well is a lot of people are really, really worried, especially with, the rising cost of tuition of how they're going to pay. Scholarships and grants are obviously great, but not everyone's going to get them. When it comes to student loans, I always tell individuals who are running their own businesses, we can borrow for education. We cannot borrow for our retirement. And so, we want to make sure that, as we're building out our plan, as we're looking at what we want our retirement to look like, when we want to be financially independent, we're keeping in mind, things like this, like education planning and saying, okay, if I take on debt down the road, I'm sure a lot of you have a really good understanding of realtors saying, can I take it on? What are the interest rates going to look like? And kind of having those calculations, even if it's for 5, 10 years from now. And that's something that we're working with a lot of individuals on as well. If you want to go down to the estate planning, can your business loan money to your children like a student loan? So, something that we're doing with a lot of individuals, if they are, really crushing it, selling, a lot of homes every year, then what you can do actually is, let's say you have an S corp or an LLC, is actually put your kids on payroll and provide them with a W-2 or a 10. There's a couple different ways to go about it, and it actually is going to be tax advantage for you. You can also help set up different accounts for them inside your business, but that tends to be a better way, is actually putting them on payroll rather than loaning them money. You can set up certain loan structures, but often they don't make as much sense as just having payroll if you want to. But that, yeah, of course, no problem. And then estate planning, I think this is something that's really, really important, not just for you guys, but for your clients. The last thing you want is for something to happen to you and have the government make a plan for you. So most realtors understand the power of real estate, but they don't have a thought about what happens to their assets when they're gone. So if you don't have a plan, again, the government will make one for you. And trust me, it will not be in your favor. You do not want a California state probate judge deciding where assets go. So if your real estate empire should be your legacy, that then don't make it a liability. You need to have wills, trusts. Make sure that you're constantly looking at things like beneficiary designations on investment accounts to ensure that your hard-earned assets go where you want them to. A lot of this ties into business planning as well. If you have a partner or maybe your spouse is part of the business, you want to make sure that you have again, especially trusts and wills in place that really designate, God forbid something happens to me, this is what's going to happen with my business. This is what's going to happen. This is where my assets are going from my family. That last bottom bullet, estate taxation. Probably if you do have an estate tax issue, that's great. But that means that, at this point, you and your spouse are probably worth over $30 million. So the exclusions are really, really high today. Not many people have to deal with estate tax issues. But down the road, if it is something, I can tell you the only thing that's a guarantee with estate tax is it's changed tons of times in the past 20 years. And it's going to change a bunch of times in the next 20 years. So making sure that you have these different, trusts, wills, powers of attorneys in place and really protect you from, again, giving a tip to the government, God forbid something were to happen to you. So that's something to keep in mind. If you want to go to the next slide here, it's just going to say questions. Do you want to go all the way?
Keep going.
Yeah, keep going. Thank you. You can keep going. Maybe after retirement. Yeah, one more. Sorry about that. Questions. So key takeaways is just, making sure you're managing your income. I know this is kind of all basic information, but especially when you start, I remember, and I'm also a contractor growing my own book of business. When I first, started getting some of that real income coming in, you're more happy to have money in your bank account. You're not really starting to think about the future, but the earlier you can start some of these plannings, like through retirement accounts, like investment accounts for our kids, or just thinking about different entity structures and getting our estate planning in place, I guarantee the more sound of mind you're going to have, in the future, you will be able to make a lot more decisions on when you want to retire, how you want, your retirement to look. The later you start, usually the later you have to work. So, again, managing income is really important. Make sure you're tracking your expenses if you're just starting, and investing wisely. There's tons of different ways to invest, right? We have these different retirement accounts. We have different products out there. and make sure that you're protecting your assets, right? Make sure that you have those insurances in place and that you have an estate plan in place. So I know we covered a lot, but financial planning is like real estate, right? Every decision you make today impacts your future. So, if you have a big financial concern right now, you haven't had a chance to sit down with a professional, Alex and I are more happy to be that resource for you guys. I hope that there's something you learned today that you're at least going to go take action on, or that we brought up. If you're ready to take control of your finances, feel free to reach out to us for next steps. And I would love to answer any questions on any of the topics that we went through, whether it's brought up in the chat or if you want to email us directly.
Yeah, and chat's good if you want to throw any questions in the chat, or if you raise your hand, we'll call on you if you want to answer live or ask live. So a couple closing things. What would be, I guess, the first few things for a new realtor starting up, so they don't, because what'll happen is they'll start to get busy and busy, and then life happens and they start putting all this stuff off. So
Right.
as they're setting up their business, which many of them do, where they're like, okay, well, I want to get everything set up and then I'm going to go out and get business. Or as I'm starting to build, I also want to have these other things in place. So uh, I can just continue going without having to kind of stop and readjust my plan. What would be
Mhm.
some of the key things that they should do in the beginning when they're setting up their business as a new realtor?
Yeah. If they don't have an entity yet, so that they don't have, an LLC or an S corp, then I would recommend just opening either a traditional IRA or a Roth IRA. The limits are $7,000 a year that you can put into those accounts. They have different tax advantages, but they're retirement accounts, and just make a habit of each paycheck you contribute, then each paycheck you get, something's going into that account. Can you contribute to after tax conversion Roth from payroll? If you have that's a great question. If you have a SEP IRA or a solo 401k, you can from payroll contribute to both those after tax. So that's something to keep in mind. And you contribute much larger amounts into those accounts than the normal, just traditional Roth IRA. So you are able to contribute after tax. You don't get a deduction because it's after tax, but you never have to pay taxes on those dollars again. They get to grow tax free in the market. But
And then what
back
would
to
you, oh, go ahead. Do you want to finish
Yeah,
your
back to your
thought?
question, for people who are just starting out, make sure you're opening those Roth IRA or individual IRA. Also, just an individual investment account. Um, Obviously, there's tons of major institutions out there, and they're all pretty simple to set up nowadays. If you don't know tons about investing and you're really just focused on saving for that next real estate, just look up some of those really general index funds, things like SPY, VOO, IWM. Those are the major market indexes. You're tracking things like the S&P 500, the Nasdaq, and the Russell 2000. You're pretty safe if you're able to, just put dollars in those. Obviously, there's more advanced things you can do, but if you don't really want to keep track of it, you're just getting started. It's definitely a place to start. And also for someone who's just getting started, if you're thinking about having a family or you have a family, go out there and get your estate plan dealt with. The last thing you want is to work really hard, forget about your estate planning. Again, have a state judge decide how your wife and kids get your asset, or whoever. Pretty much, sometimes it can be is whoever gets the best lawyer pretty much gets your asset. So that's the last thing you want your if something happens. I really want to harp on that one. And then, of course, also insurances are really important. The protection planning, the umbrella insurance. At some point, you're going to have a disgruntled customer if you're in this business for a long time. So errors and emissions is something that you can also purchase out there, which can cover you as well.
Okay, and then what about, one question was, are all of these self-directed?
You can set them up self-directed. It's just going to, again, be based on your individual situation, but you can have a self-directed solo 401k. You can have a self-directed SEP IRA, yes. So you can do self-directed investments inside of those accounts. The only one you can purchase real estate is going to be the solo 401k.
And what would you suggest? So there's the new realtors, but then there's also the realtors that, we have a ton of them in the chat right now, who have been in the business for a bit. They're making a living, but they don't have anything set up. Maybe they've been in the business for 5, 10 years, and they're just going at it, right? But they don't have any plans really in place for how do I exit this business and still be able to have income coming in, because maybe their Social Security isn't going to be where it needs to be and different things like that. So, what would you suggest to those realtors? And yeah.
Yeah, I mean, again, I think it's all going to depend on their own individual situation, but blanket is really look at your entity structure, see if there's any ways that you can create some tax advantages. Often there is. Consult with a professional, whether it's Alex and I or someone else in your network, on how you can set up some of these retirement accounts. Um, the beauty of being your own boss and being able to control your income is if you're making a lot of it, there's a lot of strategies out there when it comes to retirement planning for what you can do. I mean, you can set up your own individual pension plans that are very tax advantaged, are very helpful down the road. And if anything, if you're kind of like just want to keep it as simple as possible, if you're making a lot of money, just set up one of those individual investment accounts, and try to stuff money into it because that can be really, really helpful down the road. Obviously, you guys are seeing it right now in your industry. We're seeing it at ours. There's a lot of turbulence with the geopolitical situation, what's happening with interest rates. Things are kind of turbulent and volatile right now. But ultimately, if you're in it for the long term, you're going to make a lot of money investing in the market. So just make sure you're balancing, having something on the side that's not real estate, right? So if you're going to have tons of real estate investment properties, make sure you're also investing in something else, whether it's another side business or another investment account, to make sure that we're having balance. Because the last thing you want is your first year of retirement to be 2008 and not have any of those buffers in your portfolio.
Yeah. Yeah, for real. Um, all right. Any other questions? You can toss them in the chat. Otherwise, I think go ahead and wrap up.
Yeah.
So,
Again, we're a goal-based financial planning team. Our process is really, really simple. For any of you who are a part of this presentation, if you want a cost-free analysis, basically we sit down with you, learn about what you've gotten started for yourself. Learn the number of side of things, your savings, your earnings, and then really learn your aspirations. What do you want to accomplish in the next 5, 10, 20 years, both personally, professionally, and financially? What do you want your retirement to look like? And once we have that information, Alex and I and our team go back. Again, we do that cost-free analysis showing here's where you are relative to some of these goals. And here's maybe some of the gaps that you can fill in on your own, or that, our team can help you fill in as well. And what I'll tell you is, if we sit down with you and we say, hey, actually, you're crushing it on all levels. You don't need us. We'll be the first to tell you that. But oftentimes, we do see gaps that you can fill in. So we're more than happy to sit down and see if, there's something we can help you out with.
I think that's a good thing to bring up is, really think about what do you want your retirement to look like? Because, we're in a business where we can do this forever, right? We can just
Right.
keep selling real estate. However, do you want to have to, or do you want it to just be something that becomes a little less stressful because you're working with, maybe people you like and it's extra money and things like that because you have, all of your invested income over the years working for you in your retirement. So that's something I've really been reflecting on a lot too, over the past few years is, you know, how am I going to exit the business someday?
Mm.
And what do I want that to look like? Because I don't want to have to sell homes, have to sell homes when I'm 80 years old. Will I be, potentially, but I would rather want to than have to. So that's something that I, really encourage you is thinking about how do you want that to look and being honest. When you do talk to a financial advisor about that.
And I mean, something to really take away, hopefully, from this conversation is just diversification. There's obviously risks associated with any investment, and I've seen individuals who are planning on just basically using their rental income from properties they've acquired over years to supplement, what they need to basically survive and or thrive and enjoy their retirement. But there are things that can happen. There are natural disasters, there are disgruntled renters, there are whatever it may be. And so you want to make sure that, not all of your eggs are in one basket, that we're actually putting dollars somewhere else, whether it is, the stock market or just, a savings account or CDs or whatever it may be. That's, going to create that buffer again, where God forbid something happens in those first few years of retirement, you have something else to lean on.
Yeah, definitely. So, okay. Great presentation. And If you have any questions, just reach out to them and they can give you a consultation and kind of review what you have going on right now, whether it's a lot or a little or nothing, and get some planning done. So figured this is a good time of year to do this because we're all kind of either just finishing up taxes or just getting into taxes. So and a lot of us are really thinking about this kind of stuff right now. So I figured the timing on this was pretty good. So. Thanks for coming on. I appreciate it. And
Sure.
looks like Manny's going to reach out to you and possibly Mary as well. So
Awesome. Well,
um,
we really appreciate your guys' time today. Thanks for giving us time on Monday. And have a great rest of your week.
sounds good. All right. Thanks a lot.
Thank you.
And
Take care.
hope everybody has a great week. Turn my camera back on. So yeah, if you have questions on anything, give them a call. If you need anything, I'm always around, obviously, for real estate questions, not for financial planning. But yeah, hope everybody has a great week, and we'll talk to you soon.